Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dolly Varden Silver, a mineral exploration company focused on advancing its 100% held Kitsault Valley project in the Golden Triangle of British Columbia, Canada. It's Shawn Khunkhun. We're going to talk silver today. Thank you so much for coming on.
Thanks for having me on, Jesse.
Well, people really loved your last interview, so I'm very excited about this follow-up. I want to start by just getting a sense of where you're at when it comes to the macro of the silver space at the moment. So I'm wondering, what are the main themes and trends you're currently following in the silver market that you think more investors and stackers should be paying attention to?
Great question. I think the way to sum up is that just persistent supply deficits. That is the way I'd sum it up. And there's seven main contributors to that. Whether we look at the green transition, silver as a monetary metal, the gold to silver ratio. It's essentially just the deficit that continues, right? That's the main macro trend. And what's so rewarding is we've had those fundamentals in place for some time. And I think there was a lot of speculators, investors that were getting frustrated, and they're saying, we don't want to hear about this anymore. We've seen this bull case for silver, and the price isn't moving, and the price isn't moving up, or the price is going down. And what's great, Jesse, now is we're in an environment where we are seeing the price move up. We're seeing incredible price appreciation, and maybe for some it's not fast enough, it's not strong enough, and it's not keeping up to gold as much as they'd like it to. But ultimately, nobody can argue with the numbers and the math. And the fact is, all of these factors, the challenging in silver mining, the geopolitical uncertainty, the tightness on premiums in the physical market, this is why the price is moving up, right? And so, look, you can't argue with it.
Yeah, I completely agree with you. There does seem to be, well, I mean, some silver investors have been very patient, but when you look at the move in silver, as we're going to discuss a little later, it's up basically as much as gold year over year. So its performance has not been lagging to this point, or if so, it's by a very small percentage. I had Ed Steer on the show recently, and he kind of echoed your sentiments when it comes to silver deficits. He said we're in the fifth year of a silver deficit that is headed towards a brick wall. He believes that when reality hits that brick wall, we're going to see the silver price rise by many orders of magnitude. Now, Ed's an incredibly smart and well-researched guy. He's been writing about and researching the precious metals market for decades. I wonder what your thoughts are there. Obviously, this is kind of a something that we've heard a lot recently, and we will get comments about, yeah, people say this all the time, but where are we, do you think, in that structural deficit? And when do you think it becomes obvious to the market at large?
Mm-hmm. Well, specifically the many orders of magnitude in terms of rise, I think it depends on how severe the supply crisis becomes, right? And so, that rising industrial demand, the stagnant mine supply, the declining above ground inventories, and the paper versus the physical market, and that differentiate the difference there. I guess what you're really asking is, what's the trigger point? And look, I think it's all of the above. And I think, and I agree with Ed Steer, and I follow his work, and anytime there's an opportunity to hear his take on things, I think for everything that we've laid out, that and why we've seen the price move the way we have. But it's a question of, in order to get the many magnitudes, it's a question of what's the trigger point. And the difficult thing I think we all find is, like, if we take gold as an example, gold was range bound for a number of years. And that, and the range that I'm referring to was a range that it was in from 2013 to 2019. So gold was in this after rising from, call it 200 to 2000. it spent 6 years in a range. 1,000 on the low, 1,300 on the high. What was the trigger that sent gold through 1350 in the spring of 2019? What was the trigger? Was it central banks buying? Was it dwindling mine supply? Was it gold being the idea of it becoming a tier one asset? Like, what was the trigger point? When we look back, and right now, April silver or May silver is like close to $35 here. Are we going to look back and say, well, it was Vladimir Putin bringing silver into his precious, the Russian central bank's precious metal basket? Was it that? Was it Trump's tariffs and the LBMA inventories going down over 8% in the month of January alone? Right? Like, what are we going to point to? And I think the other way to look at this is, is it happening? Like, are we in the midst of it right now? And in terms of the triggering to the many magnitudes, like, I guess, maybe the way to look at it is, what's going to cause triple digit silver? I think everything that we've outlined here all are going to play into a steady, consistent, stable, sustained rise in the silver price.
Yeah, great thoughts there. And we need to get to triple digit silver, I believe, inflation adjusted, just to get back to previous all-time highs. So I think that's definitely a realistic proposition. It's all a matter of when. Obviously, as Rick Rule says, inevitable and imminent are two different things. So I think some patience is definitely required. I want to talk about silver mine supply, because silver is a metal that is mined primarily as a byproduct of other metals, gold, lead, zinc, etc. Obviously, this makes it difficult to ramp up production directly in the face of these rising deficits we've been discussing. Maybe you could give some thoughts on that as a CEO who works in the silver mining industry. What are the challenges that could present in terms of bringing more silver supply online?
So I've been around professionally around the mining industry for 22 years. And actually, the bulk of those years have been predominantly around gold mining. And, when gold prices rise, the price rise leads to more exploration and more development. Simple. That doesn't happen in silver. And the reason for that is, so unlike other metals, because silver doesn't come from primary silver mines, very, very small, just about 1 in every 4 ounces comes from a primary mine. The bulk of the ounces come as a byproduct. So unlike rising prices being the cure for more silver, that doesn't work that way. And that's the fundamental, and it sounds so simple, but that's the fundamental difference, and why those who are speculating on silver and investing in silver are as passionate as they are, because there's nothing else like it. And the reality is, like, you look at the COMEX or LBMA. If we took LBMA, I think the inventories are down by like 10,000 tons over the last couple of years, like 34,000 down to 24,000. Like, this is a significant drawdown in existing above ground stockpiles, right? And the problem with other sources like recycling, the reality is, silver is used in small amounts, so it's hard to recover. And so when you look at, okay, well, the price rises, where are we going to get the silver? It's a structural problem. And then if you go in a step further and you look at, okay, where do we get primary silver? And you look at the countries that host the primary silver mines, and you look at some of the government policies, or at least political rhetoric that's coming out of those nations, it's really concerning from the standpoint of, I think the stat is something like, Mexico is the number one silver producer in the world. 7 out of every 10 ounces in Mexico come from open pit operations. And there seems to be a, a reluctance to allow for new open pit projects in country, or at least a slowdown in terms of the advancement of those projects. So it seems like the perfect storm, Jesse, for higher prices.
Speaking of silver's performance, if we're looking at both gold and silver, they're both up around 38% since the start of 2024. People like to complain about silver and say it's not keeping up with gold, but the facts are that silver has had an exceptional performance since the beginning of last year over year as well. What stage do you think we're at in this precious metals bull market? Historically, silver tends to outperform gold in the latter stages. Could it be different this time? So far, it's keeping pace. What will it take for it to break free and outperform gold potentially?
I think that in the past, where precious metals, you're asking specifically about silver, but before we specifically go there, I want to start with precious. Because despite record high gold prices, that's occurred at a time where other asset classes are still performing quite well. And so I think if you study the precious metals bull markets of the past, what you'll see is you really want to see that sector rotation. Right now, are we in the beginning innings of a gold to S&P breakout? Right? Or are we starting to see that? And so I want to start with the idea that let's celebrate how well both gold and silver have done, despite the strength of everything else, the everything bubble that we've competed against. Why are gold and silver doing so well in an environment where, a lot of the historical evidence that it would say gold and silver should be down when you have all of the other factors that exist in the world today? So I think let's start there. And then as we look at, well, when's silver really going to get going? Historically, that's been on the back of a sector rotation. That's been on the back of other markets not moving up as fast or even declining. I've got some friends who have done extremely well in previous cycles, and some of them are in, some of them are all in, but some of them are actually on the sidelines going, we're waiting for a crash. We'll buy this market because every other time in history, particularly with silver gets going on the back of a crash. And then it does fantastically well. Because there's a fear that if there is a nasty correction, or heaven forbid, a crash, that silver's going to get hurt, and so is gold. But my argument is, when I look back at, say, the last major, longer crash that we've had in recent history, it would be 2008, right? The difference between today and, say, '07, pre-crash, was particularly precious metals and precious metals equities had moved up a lot, from the early part of 2000. If you go back and look at companies like, Barrick, okay? Barrick was like over $50 a share, right? And my point here is Barrick had room to crash, is elevated. So was the price of gold. The price of gold had gone from 200 to 1,000. It was up 5 times. My argument today is, particularly with silver, silver is trading below its historic nominal highs, not even factoring in inflation. And silver equities and precious metals equities at large, commodity as equities at large, have drastically underperformed. So I feel like even if there is a crash, I don't think this sector gets hurt. But to really answer your question, look, I just take what the market gives me. And what the market's giving me right now is a clear sign that we are in a gold bull market. no question. And I have time right now to continue to add to silver because the ratio is in the above the 80-1.
Yeah, and I think by all accounts, you mentioned the broad market and you know aftermaths of market crashes. I think by all accounts, the market's tremendously overvalued. There's so many metrics you can look at: the Shiller PE ratio, just the level of exuberance that exists among investors when it comes to the Magnificent Seven. Yes, these are real companies, but the price you pay matters. I mean, this is classic Ben Graham stuff. Um, so I think we will, going back to, inevitable doesn't mean imminent. I think there will be a correction, a sharper correction at some point. And I think perhaps you're correct in terms of a historical basis. Silver always outperforms in those scenarios. Let's jump over to Dolly Varden Silver. It's been a while since I last had you on the show. So let's dive into some news. Firstly, give us an overview of where Dolly Varden Silver is at right now and what has you most excited when it comes to the progress you've been making recently.
Great question. So what is Dolly Varden? Dolly Varden it's an equity. It's a stock that trades on the exchange. That our mission, our goal, is to give investors a vehicle. Okay, because going back to silver, the difference this time in silver is because of the industry's demand for silver. Like that's where, unlike past cycles, the prolonged structural deficit is different this time. And so when we have that moment, which we inevitably will, I tried to position this company, and it's really, really simple. It's a safe jurisdiction. It's a high grade deposit, and there's an abundance of mineral inventory. I was talking to a friend who is helped me build Dolly Varden. We've gone out and secured over $100 million in financing, and this gentleman was instrumental in sourcing that capital to build this company. And I was talking to him about some recent conversations I've had with some generalist investors, like as recently as Friday. This is a Monday, St. Patrick's Day, March 17th. On the 14th, there were some generalists who they did about 3 minutes of due diligence before they made a decision to take a position in the company. What you have to understand, Jesse, is, and I've lived this before, going through 2000, the last cycle, the cycle that ended in gold's rise to 1900 and silver's rise to $50 in 2011. I remember the move from when the generalist money came into the space. And my point to you is, because I've built this company, it's a top 15 silver equity the way I base that is. And what I've built here is there are 11 primary silver producers. There are 11. That's it. So if an investor wants to play the space, there's 11 companies to buy. Beyond those 11 companies, there's 4 companies that have greater than a $200 million valuation that are in an arena that, whether you describe them as advanced explorers, developers, they're pre-production companies with large mineral inventories. Dolly is one of the 4. So we're a top 15, we're one of the 4. And so what's got me excited is really the tailwind that silver is giving us here. One of our investors, Eric Sprott, his advice to me and to others that he's made investments is let silver be your tailwind. You don't have to, go out and do anything too drastic, too transformational. Like, just let silver be your tailwind. Keep doing what you're doing, because when the world comes, they have 15 companies to buy, and you're one of the 15. And that's why Eric got way ahead of it. Eric saw this coming years ago. And that's why he came into silver. He was investing in Dolly Varden stock when we were 20, 30, 40 cents a share. Today we're over $1 a share. And he's done it at a time where the investors weren't there, right? And so what's got me excited about Dolly is we've built this company during a uh, during a depression in the precious metals market. There hasn't been exploration. There's been no incentive to explore. Jesse, silver up until last April, it was really uneconomic for most silver mines, right? It really wasn't. Sub $25 silver, it's a tough business. The environment we're in today, it's a very lucrative business. And so we built a company at a time where there was no incentive to build it. And, we had to work really hard. And now we've created a company that is in the richest rocks in the world, the Golden Triangle, BC. We're in a stable country where we now have an adult that's leading the country. And, we may even see even more political change beyond that. So we're in the right political environment that's changed. We've got infrastructure. We've got certainty when it comes to First Nations. We've got a this project for me, Jesse, it's just north. I can drive there. I can fly there. I can boat there. Same language, same currency, same time zone. Easy to run, easy to run. And it's perspective. I've got $32.5 million in the treasury as of today, where I can leverage that treasury into making this thing bigger, de-risking it, advancing it, doing the studies. So I am excited because I've been doing this for 22 years, specifically with Dolly for 5. And in the 5 years that I've been running Dolly Varden, I've taken this little past producing historic mine up in Northwest BC, and I've, through acquisition, through financing, through discovery, through enhancing a team of scientists, giving them treasury and the ability to go out and let the rocks talk, they have stepped out, expanded, and extended. So, look, man, I'm really excited about the upcoming drill program. We're going to put $20 million into the ground. And, I was talking to a friend over the weekend who's also been very, very helpful at launching Dolly. And he said, look, the reason the company's doing as well as it has done is because the drill results are so good. You're finding incredible new silver veins, gold veins. So yeah, that's sort of what's been going on at Dolly and how we're positioned for this coming bull market.
Well, that's a great segue into discussing some of your recent drilling results. A couple of press releases from this year I'd love to go over. The first is from the Wolf vein, and the second is from the Homestake silver deposit. Walk us through those results and what the next steps are. You mentioned more drilling is pending. If you could add some more color on that, that'd be great.
So why you have to pay attention to Wolf? Wolf represents the 28% of the silver market. I mentioned 1 of every 4 ounces comes from a primary silver mine. It comes from mines like Wolf, right? And more specifically, it had come from a mine called Torbrit, which is located 1.5 kilometers from Wolf. So what Wolf is it demonstrates the future of Dolly Varden. But it's one of many veins that we're looking to continue to explore and to see how much tonnage we can build up. But what Wolf is, and we've put out drill intercepts in 2024, and I'll summarize. So, look, we started at surface with a high-grade vein. And what's happened is there was a cover over that high-grade vein, so we couldn't see, Jesse, if it persisted below at depth. We drilled it, we hit it, and what's happening is as we go deeper, the vein's intensifying. So what was 10 ounces of silver, which is really rich, 300 grams per ton of silver, is now 500, 600 grams. And as we chase it to depth, the vein is getting wider and thicker and more intense. And so it seems like we're heading towards a heat source. And what's exciting is it's located so close to that Torbrit mine, we're wondering if they're part of the same mineralizing system. And we're wondering if, as we join these deposits, if we're going to hit the source of it. And that could be something that has a lot of tonnage, a lot of grade, and for our investors, a lot of exposures to some high quality silver ounces. So Wolf is we're looking at spending somewhere in the neighborhood of about $6 or $7 million at the Wolf deposit, and what that'll accomplish is we'll infill it, meaning we'll study what's happening in between existing drill hits. So we'll show that they're continuous. They'll give us the confidence that when we go make a mining decision, the silver's going to be there. And we'll understand the grade, we'll understand the thickness, we'll understand the tonnage. So we'll infill it. That'll enable us to put out a new 43101 at Wolf and put those ounces into a compliant estimate. And then we'll continue to chase it. We'll continue to do aggressive step outs to see how big this deposit is.
I was listening to a talk you gave in January at the Metals Investor Forum. You brought up a very interesting statistic, which is there was a third of the money raised in 2023 as there was in 2013 in the mining sector. And as you pointed out, 2013 was not a good year. How do things look so far in 2025? And what will it take to attract more capital to the space? Is it just once we start to see this rotation potentially out of overvalued tech into hard assets, when we start to see silver get into that $35 plus range, what will it take? I guess my question would be more specifically to the silver and gold space. What will it take for us to see more capital getting attracted in terms of financings, et cetera?
Yeah, and I think it's important that I talk about, and do an apples to apples comparison. So what I was referring to was, again, we had these great mine finance markets in 2010, 11, and 2013 was a very tough year because gold had fallen from 1,500 down to 1,300. But yet in that year, 2013, in Canada, we as a exchange, and as in Canadian capital markets, we executed collectively over $6 billion in brokered private placements. Okay. Now you fast forward from 2013 to 2023, and we were sub 2 billion. So that's where the 1 in 3 or 30 cents on every dollar. Sadly, in 2024, I don't think we cracked the billion, Jesse. So it went from bad to worse. What I'm seeing so far in 2025 is an uptick in activity, which is great news. We've got an uptick in activity, and we're seeing it like anecdotally here. Dolly Varden works out of the Fiore office. Frank Giustra, the CEO of the Fiore group of companies. And what I'm seeing in the Fiore group today, and this just gives you some anecdotal evidence of financing strength, the Fiore group launched a non-brokered on a company called Premium Resources, where through a non-brokered private placement, the Premium is raising $44 million, which is a pretty significant amount of capital. One of the other companies in the office here, West Red Lake Gold Mines, just completed a $20 million bought deal, free trading prospectus deal. But what's interesting about that is I was told there was about 60 million of demand, and so they went out, I think, asking for 12. They ended up raising 20, but there was demand for 500% more than they. So what we're seeing, to answer your question, is we're seeing a lot of demand for the right projects and management teams, as long as there's other capital that's coming. It's, this business, you could sum it down to 3 factors: people, project, and money.
Yeah, this has been a great conversation, Shawn. You've shed so much light on the silver industry and on Dolly Varden. But before I let you go, I just want to kind of open the floor to you. Is there anything we haven't yet covered when it comes to the company in the silver sector, or something you'd like to emphasize to potential shareholders of Dolly Varden Silver?
Look, I think we've built the Silver Co., right? We've built the top 15 Silver Co. My ambition is to take it to top 10. My ambition is to build the next Pan American, the next Coeur, the next Hecla, and we need a tailwind for that to occur, and I think that tailwind is the price of silver. And I just want your audience to appreciate one fact, which is a century ago, when investors went to get that silver exposure because gold is at record highs, they didn't have to compete with industry. 90% of silver was acquired for investment purposes. Today, less than half of the silver is for investors. The other half is taken up by industry, for things like solar panels and EVs and in military use. So my point to you is, for this coming cycle that we're in, what I think is going to make this even more meaningful, even more dramatic, and this goes back to Ed Steer's comments, why people like Ed Steer and Eric Sprott and Willem Middelkoop and others are all so bullish on the metal, is because of that factor. It's, the investors are going to be competing with industry in a metal that's not primary metal. It's a byproduct metal. So you can't throw more money. More money doesn't solve the deficit. And that, I think, if you get it, that's why investors are pouring into companies like Dolly Varden today.
Well, I'm going to put a link in the description below to the Dolly Varden website, as well as social media profile, for people who want to follow along with the company. Shawn, always a blast having you on the show and talking silver and Dolly Varden. Thank you so much for coming on and sharing your knowledge with the audience.
Thanks for having me on, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.